Hey, my name's Jack Nicholson and welcome to my YouTube channel. In this video, I've got a new type of mortgage that could be good for you if your belief is that interest rates are going to come down over the next few months or years. It's an 18-month mortgage. It's by Halifax. I've got all the details, the rates and much more. Who should consider this? Is it a good idea? Maybe you have. I've never heard of an 18-month mortgage before, but I do think it's a good little niche because there's a lot of requests for 2-year deals at the moment. 2-year deals are significantly more popular at the moment than the 5-year deals, and that's because a lot of people just feel rates are going to drop. In fact, is what we're being told is going to happen by the Bank of England. So let's talk about this and more. If you're new around here and you haven't done already, do subscribe to the channel over there and hit that bell notification. We've got new property content every single day on this channel. And if you subscribe, you'll make sure that you get that first. And let's get some more views on this video by smashing like, tickling like, doing something to that like button. That really helps us with the YouTube algorithm. And that's how we grow the channel. So thanks to everyone that takes a moment to do that. So what's going on? Well, Halifax have come out with this little niche, which I like. I think this is a good option. And I think quite a few of you might consider this. So the consensus at the moment is that while inflation has ticked up a little bit, a lot of people feel that it is going to come back down to the 2% target. And we'll stop talking about inflation eventually. And it won't be something that we carry on with. So the consideration is that, is the economy going to crater? You see, we had a budget that the markets don't really like. You've got national insurance increases, you've got minimum wage increases, and not talked about so much is there's a category of business rates which is going up significantly, and that could cause businesses to really struggle. You've got lots of big retailers saying they're going to be cutting staff early next year, and we've already had a bad quarter. So the expectation was that the last quarter would be good. It wasn't. We're down 0.1% on GDP. If we get another one of those, we're technically in a recession. In a recession, what is likely to happen, as long as the inflation is a bit more under control, is rate cutting will speed up. So the belief is that a lot of people is that they should have a shorter mortgage as possible. There are some 1-year deals out there that I've seen. I've never seen an 18-month deal, but let me know in the comments, maybe you've seen them before. I just haven't seen them. Maybe they've existed for a while, but Halifax, this is a new product for them. Now, this gives people the opportunity to fix for a shorter period of time. You'll see the rate is pretty good, and that gives you the expectation that at the end of this deal, rates will be cheaper and you'll be able to refinance onto one of those better rates. I did a video yesterday for other people that want to hedge against this type of thing, and that's a consideration of a tracker mortgage. You see, the Bank of England have said that they expect mortgage rates, or their rate, the Bank of England base rate, to drop 4 times in 2025. If that happens, then a tracker rate could be an alternative. So do go and watch that video if you want to see what that's about. So let's talk about this Halifax deal. So it's 18 months, which is good. And the fees are pretty good on this as well. So the rate is 4.37%. And the equity that you need for this one, so there are different versions of this deal, but this is the best deal they've got. You would need 40% deposit. So you either need a 40% deposit or 40% equity. Obviously, I know not many people would have a 40% deposit, but equity-wise, there are more than half of the mortgages out there that could qualify for this. So that is a good option for a lot of people. Now, how does this compare to the 2-year deal? Well, the 2-year deal is at 4.27. So it's a smidge higher, but you're taking the gamble here that you think rates are going to go down, which is probably quite likely. The fees on this aren't too bad. The 1,499 in fees. So it's not a bad deal all round. How much would you pay if you had a mortgage of 200 grand. Let's look at the monthly payments on this. So if you had a mortgage of 200 grand, the monthly payments on this would be £1,097. So we're moving in the right direction. And I think this is definitely a mortgage that people should consider if you believe that rates will drop. So you've got a few options at the moment. We've talked trackers this week. That gives you an option if you're believing that rates are going to go down. But if you do feel that rates are going to go up, which there is tons of you that comment on my channel, also believe that rates will go up, that inflation is going to come roaring back, then this isn't the deal for you. And with all of these types of things, you must speak to a broker. You must go through your personal circumstances. Let's see, is this right for you? This isn't financial advice. It's just giving you more options. Now, once one lender does this, I think you will start to see some other lenders. If this deal becomes popular, I'm sure you'll see Nationwide do it, NatWest do it, and all the other lenders all jump on the same bandwagon, and they will do similar products. Because at the moment, the market is fairly busy. October was 25% up on sales from October 2023, which is a big jump. And there's still good activity in the market at the moment. Estate agents are busier at the moment because a lot of people want to do deals, particularly first-time buyers who are going to get hit very hard with the stamp duty increases that are coming in the end of March. So the market is busy, but there's a good chance that January or February, people will realise they're not going to get their deals completed before that April the 1st stamp duty deal. So what they understand is that they're not going to get it done in time. And so the market, I believe, and a lot of people believe, would start to slow down significantly in 2025 in the second quarter. And that means that lenders now are starting to think about what can we do to motivate people to get mortgages with us, get deals done with us. And this is Halifax really getting creative and thinking out the box. I think this is good. I think it is an option. And I think we should hopefully see other things like this. How does it compare to a tracker? Well, this gives you certainty. The tracker, you can't guarantee that the rates are going to drop. You have no real control over whether the Bank of England do cut rates 4 times next year, but they are saying they are going to. There is a good chance that that will happen, but this gives you the certainty that you've got a fairly good rate, and then you've got a full 18-month period where hopefully the rates will drop and you can come off this fixed certain deal with certain monthly payments, and hopefully the market is in a better position at the back of it. What do you think about this 18-month deal from Halifax? Is it something you would consider? Have you seen other lenders with 18-month deals? Do let me know in the comments below, because people will watch this and maybe they're interested in an 18-month deal, but they'd rather go with their existing lender. So if you can give us a list of other lenders below, that will definitely help. Do smash like and share this video with other people. Do check out all the other content on my channel, including this video right here.